So there are two primary ways that you can use Market Cipher. One of which we're going to call the crypto-face way, which is essentially you using Market Cipher as your primary basis for your analysis, okay? What crypto-face will do is he'll make a TA video and he'll say, all right, guys, so the RSIs look like this, Market Cipher looks like this, we have a momentum wave doing this, etc. And this is essentially how he decides where he's going to enter from, which direction he's going to enter from, and very importantly as well, how long the move might take to actually play out and come into fruition. Now, with that being said, the crypto face way is A, not for everybody, and B, can be very misleading. Okay, the reason why it can be very misleading is because sometimes in these markets, things are mad choppy. And when I say misleading, please don't misinterpret what I mean. I'm referring primarily to the scalpers like myself. And why it can be misleading? Because although maybe your 4-hour will show you a nice white dot in my case with money flow coming up, you know, you might be getting bear divs on the 5-minute and the 10-minute and spike wave divergences, money flow coming out, VWAP divergences. And you're like, why is it going up? It should be coming down a little bit. And it can be very deceiving if you're a scalper especially. So that's the crypto face ways where you're essentially maining Market Cipher. Now that could work. It could. And you know, kudos to you if you are, you know, doing well with that, then perhaps this video is not for you. But for us mortals that are not as good at reading Market Cipher as crypto face is, I have another suggestion for you in another way, in a way that I've actually really started to utilize Market Cipher myself. And if you stay till the end of the video, I'll give you a little tip that you can use in regards to actually being able to get the best out of this indicator, okay? The second way to use Market Cipher is to wait for a key level, okay? Now, this way, in my opinion, is much more effective, especially when the market has been as choppy as it has been. And guys, this is all objective, okay? Let's come on to the weekly time frame, for example, right? On the weekly time frame, it's been mad bullish for mad long. We had our big pump last year, fine, whatever. But just in this range, it's been mad chop, as we know. It's looked like it was supposed to break out how long ago now, and it hasn't broken out. So it can be very deceiving. Now, the way that I use Market Cipher and the way that I've been utilizing it as of late is to wait for key levels, okay? Key levels are so much more effective, in my opinion, because Market Cipher will, for the most part, look a certain way when it comes to these key levels. Now, there are instances in which you don't really have too much notice getting in at these levels if they're like really scalp levels and you're going in high leverage, etc. But I wanted to show you why things are way different when you have a key level, okay? When you have a specific number or a small range, this morning, by the way, let me just show you here. I did short Bitcoin this morning. We shorted it from basically almost the exact high. So 71446 here, 71446. I did let the Nexus know during stream that I was looking for shorts here. It is a small position because I did think that there was a potential of us coming higher. So I only started building the position. It was nothing crazy, but I did nonetheless short it here. And I want to explain why and what's the difference, right? We talked about how on the smaller term time frames, sometimes you can get faked out. You can have multiple divergences, and I'm guilty of it. If you guys have been around on the streams, you know I'm like, oh man, we're getting the divs, and then the divs don't div. And it's like, what the hell? So what I've taken and what I've done as of late, a new approach, is to really start to pay attention to my key levels. Look at how you had divergences coming this whole way up. Not the money flow, so not the greatest example. But you did have divergences. Look at here, right? Look at this. This was a perfect spike wave divergence, okay? We have money flow coming out. We have the momentum waves coming lower. We got the RSIs diverging. We got the VWAPs diverging. And everything is looking good for price to continue lower. And then it just pops up seemingly out of nowhere. Now, with that being said, why did I not short it where I said here, but I shorted it here? Once price started to approach my key level and then I started seeing the signs, that's when I decided to pull the trigger. And keep in mind, I had a key level here and I had a key level up at 72.2 as well. So anywhere in between here is where I was looking to short. And because I started seeing this and I saw that the money flow was thick and I didn't know if we were going to get another divergence like this, I only started building my position. I did not hammer my position from here. However, once we came to the key level and I saw this multiple wave of divergences here, right? Red, white, red, white, red, white, all giving you divergences at this key level. And I saw structure really starting to fail us here. That's when I actually ended up pulling the trigger a little bit heavier. But nonetheless, it started with the key level. Okay, so that is the second way to use market cipher, and in my opinion, the much more effective way to use it. And it's because the key level is happening now. It's in real time. So your key level is like, if it works, it works. If it doesn't, it doesn't, and you can get out of the trade. Now, I'm talking, again, primarily more for the scalpers, but my swing trades all begin as scalp trades for the most part, right? And once you learn market cipher and you understand the order of operations between it, and I have a whole playlist on that, but once you learn all of it, you can really start to see how the time frames leak into one another. And why I was able to short this, even though right now, for example, the 15-minute time frame is looking pretty decent to get a dot and continue higher, is it not? But I'm not looking to long it right now. Why? Because I'm not at one of my key levels. Okay, there was a key level down here that there was a potential long on. I didn't take it. This short we did take. I am looking for higher and I am looking for lower. And whichever one happens, if my market cipher B looks the certain way that I want it to look upon entering a trade, but it has to start with the key zone, right? I have learned to not care about the divergences, to not care about the money flow, to not care about the spike waves until I'm at a key level, because A, you can get multiple fake outs on market cipher as well as other oscillators, and B, the majority of your amazing moves will happen right on your key level. You know, last night when we came down to this zone, I also longed the exact bottom. Now, I don't have the P&L shot of that, unfortunately. However, in the Nexus, I did let you guys know. Let me actually see if I can pull it up here, that I did end up longing. Yes, right here. All right, let's move over. Let's get the Nexus over here. So in the Nexus, I did let you guys know at 10:16 that I longed it right over here. And this was my entry. So the entry was 68974, 68974, and it is simply because we came to a key level first, and I saw the signals that I wanted to see at the key level. So if you're struggling with market cipher, I encourage you to get good at the technical analysis part of it, okay? Get good at identifying where the key levels are, and then get good at reading how market cipher looks across multiple time frames at that key level. And that is what's going to yield you, in my opinion, the best risk to reward and the most high probability trades. And the best trades, guys, are the ones where you're not in it forever. You know, you get in and the move happens virtually right away, and you know that you made the right move like within minutes, right? Those are the best moves, and the key zones are really the moves that are going to help, or the levels that are going to produce those larger time frame moves fairly quickly. That being said, if you are not confident in finding these key zones and these key levels, I do recommend you join the Nexus. It is my VIP Discord. It's very educational, and I go over my analysis every single morning. So the link for that is in the description down below. And I obviously give you guys, like I just showed you, you know, when I enter, what I'm looking at multiple times in the day. I am very much so updating this thing many times per day, over 10 times per day, especially when there's mad volatility like there has been. But this video is primarily to help you in the event that you're losing with market cipher. Try focusing on the key levels first, especially if you're a scalper, because it's in my experience anyways, to say the least, I can only speak for myself, it has really helped me to, honestly, my little secret is I put market cipher away until I'm at a key level. I don't even look at it. Like right now, I don't care about how market cipher looks, because right now, the only two levels I care about are this one and this one. And anything else in between, I don't care about. And I'm not trading in the middle of these two lines, because you can get chopped for days, or as of late, for weeks, maining with market cipher alone. If you like the content, hit the like and the subscribe button. If you love the content, consider joining the Nexus. The link is in the description down below. That's all I got for you this time. I will see you guys next time. Have an amazing weekend. Trade safe. It is election time, so be careful and don't rule out anything, guys. The market makers are able to hide their ill intent behind the election, behind the volatility. So next week, all-time highs in the question, 50K is in the question, and anything else in between. I'll see you next week.